Tim, Morgan Stanley last to report. What do you think? Good or bad to go last in the list of banks after they all been rallying?
I think probably a little bit negative for Morgan, simply because they've rallied kind of in sympathy already with all the other banks here, as you alluded to just earlier, Jeff. The stock has had a nice run here, still an underperformer on the air, and I think that's simply because they're probably not performing as well as some of the other big banks out there for sure. But I think the stock has gotten a little bit ahead of itself here in front of earnings. Certainly on a technical basis, it's getting overbought. Last couple of times we saw this overbought. Actually, were both of the times pre-earnings, which led to a short-term pullback. Valuations also now at the highest levels of the year on almost every metric, simply because of the rally we've seen over the past, week and a half or so. So I just think, barring blowout numbers, which I don't think, certainly on a comparative basis, will probably happen with Morgan, I'm looking for a little bit of a disappointment pullback here and staying within that kind of expected move range of, roughly about 3.5% on the stock. So I think pulling back towards that kind of little mini breakout area, support down around 108 would be my play here. So I'm structuring the trade based on that, using the expected move and support to structure my strike prices. Going out by the November 1st 108 put, selling this week's 108 put, paying probably right around 60 cents for the trade here. More importantly, selling about a 50 IV on this week's because of earnings, hedging with close to a 30 IV. So a nice term structure vol edge here, and paying just 60 cents, like these cheap calendars, as you know. And I have next week's options to continue to hedge if need be, defray further some of that cost if the stock doesn't pull back here. And if even we get a bleed out sideways, I think the spread will poke its head into profitable territory.
Got it. All right. So that's a nice way to kind of find a balance. Express some confidence in the stock longer term, but fade it as the kind of final report in banks after it's already ripped.
Yeah, absolutely. And I think the, RIP is probably due for a dip, not only on the banking sector, which certainly has benefited from kind of that, flattening, of the yield curve back towards, almost non-inverted. We'll see if that ever transpires or not, but that helps banks a little bit here. But I think the banks were kind of the redheaded stepchild for so long. They've kind of gotten overextended now quickly. So I don't look for much fireworks in banks or the overall market over the next couple of weeks. I think things are getting a little, too high to continue here, certainly on valuations and technicals, pointing to maybe a cooling off period as we get further into earnings.
Okay. Cooling off a little bit, but then picking it up on the other side. So November 1st buy, sell the October 18th. And this is, I think, a pretty good way to approach the end of the financials reporting season. Appreciate it, Tim Bingham.
Yeah.
Thank you very much. Always appreciate the trade. Option strategist at Buy Alerts. Let's talk some stock picks when we come back.